terms of how you cost them. The joint cost is all the costs together that you have to allocate to the joint products using 3 different methods, which we're going to talk about. The split-off point is where you can see the products separately. They're distinguishable. And the further processing cost is anything after the split-off point, which you assign to the different products that you are able to distinguish at the split-off point. Okay, then I spoke about the 3 different examples where you apply different costing methods. We spoke about mass manufacturing, spoke about process costing, joint and byproducts, and job order costing. For these 3 different ones, you've got a mining process, a dam wall, and assembly of a car. And the mining process is a joint manufacturing process because you move the earth. All these other products that are part of it are still part of this process until a point where you can say, okay, I found gold, I found silver, and I also found some uranium as well. So these are now 3 different products, but they come from the same process. So the gold and the silver has got a significant value to it that you can sell it. The uranium, not so much. That's why we refer to it as a byproduct. It's got a minor value. The dam wall that we built, the building of a dam wall, it's unique. Any dam would be different from the other. So you use job costing. Assembly of a car, it's of repetitive nature. So it's got the same material, the same labor and overheads and so forth. Okay. Okay, so to illustrate how this now works in terms of joint cost, let's look at an example. A raw material Z, 1,000 kilograms of it. You take 1,000 kilograms of this material. Once you process it, you're able to see 700 kilograms of A and 300 kilograms of B. So you get a little bit more of A, but the point is that of this one process, you get 2 different products. The joint costs, these are costs now before you identify them as product A and B, is for material Z, which is the material that you use, is 4 Rand per kilogram of input. So we've got 1,000 kilograms, so it's 4 Rand times 1,000. Processing costs, 5 per kilogram of output. In this case, the input and the output is the same. There's no losses. And then the water is 1,000 Rand in total. Then we've got further processing. Remember we said after we identify them as A and B, there could be some further processing to the individual products. A and B are processed at 1 Rand and 2 Rand per kilogram, respectively. A sells for 12 Rand per kilogram and B sells for 8 Rand per kilogram. That's the selling price. Now, this becomes now important, and I'll show you where. Okay, so the task is to explain and apply the methods of allocating joint cost and calculate a value using any of the 3 different methods. I mentioned the 3 different methods. One is a physical measures method. Physical measures method entails that you look at the quantity relative to the total for each of the products. As you said, A is 700 out of the 1,000 kilograms, 70%, and B is 300, so it's only 30%. That's how we look at the physical measures method. So we apply for A 70% of the cost and for B only 30% of the cost. So we say the more you make of one, the more of the cost we allocate. The sales value at split off method point, that would be the value. So the higher relative value you've got for a product in terms of the sales value, the more cost you will apply to it. And then the other one is a net realizable value. That entails the sales value less the further costs to process it. Okay, so let's see how this works in practice. So if we look at the can draw a diagram, you can see in the process, the joint process, before we identify A and B, we've got 1,000 kilograms at 4 Rand material, and then 1,000 kilograms at 5 Rand for processing, and 1,000 Rand for water. This is the cost that we need to be able to allocate to A and to B. Now, specifically for A, we've got 1 Rand times the 700 kilogram for processing. There's a 12 Rand selling price. For B is 2 Rand times 300 kilograms, specifically for B processing, and then an 8 Rand selling price. These are the facts. Okay, so in terms of the joint cost, if we calculate the total cost, we get to 10,000 Rand. It's because it's 4 Rand times 1,000 kilograms plus the 1,000 times 5 plus the water. So that's 10,000 Rand that we need to be able to allocate to A and B. And how are we going to do this? The physical measures method, physically how many units or kilograms, says the more of each unit you've got, the more of the cost it's going to carry. So as you can see, we produced 1,000 kilograms. Of the 1,000, 700 kilograms is for A and 300 is for B. It means A gets 70% and B gets 30% of the cost. So at 10,000 Rand total, it's 7 for A and 3 for B. Okay, so which means it's 10 Rand per unit for A and B. It works out the same. Okay, so if we look at the sales value, it's a little bit different. The units produced multiplied by the sales value gives you for A 8,400 and B 2,400. So the proportion changes a little bit. In the previous one, you see the split was 70-30 because of the quantity. But now because we look at sales value, you see it's even more biased towards A. A now gets 78 and B only gets 22%. So the joint cost is 7,800 and 2,200 compared to the previous one where we said 7 and 3. Okay, so that. Then the last method is the net realizable value method. Net realizable is the selling price less the further processing cost. So for A, we know we can sell it at 12 Rand, less 1 Rand further processing cost. So per unit, it's 11 Rand. For B, it's 8 Rand per unit, less 2 Rand further processing cost. So it's 6. Again, you produce the same number of units. Net realizable value is 7,700 for A, and B is 1. So it's even more biased towards A now with using this method. It's 81 to 90. And then these are the joint costs that's allocated based on that. Question so far? Okay, so the advantage of each and the disadvantages is that the physical measures method is easy to use. It's very simple. You take the total quantity relative, the quantity for the product relative to the total quantity, and you can calculate it. The disadvantage is it bears no relationship to the revenue generating power of the individual product. So it doesn't matter which margin or it contributes. It just allocates costs arbitrarily based on the quantity. Yeah, and also all joint products must be measurable by the same unit of measurement. This may lead to difficulties in some industry. If everything is liters or kilograms, it's fine. But once you have a different unit of measurement, you could run into problems. The sales value at split-off point, it is here that you assume that the higher selling price will indicate a higher cost. So you're actually assuming that all your profit margin remains the same. So there is a difficulty in comparing products for further process which aren't further processed. So that could also be a problem. Net realizable value. The GP percentage let's say, should be the same as a result from the single productive process. But it could also be difficult to calculate a net realizable value if there are a few processing stages. And the other one, which we're not going to do, is not part of it, is a constant gross profit method. This is where you say that all the products use the same gross profit and you apply it all over. Okay, so here is another example, slightly more complicated. So in this example, we have joint costs of 120,000 Rand. We also have separate processing costs of 140,000 Rand allocated to 3 different products, 90, 44, and 6,000. The question marks here is because we need to calculate this. We'll get to that now. Selling price after further processing, 24, 20, and 4. And then output from process is 862. Closing inventory is that. Okay. We assume that all products are joint products and there will be further processed. So there are no byproducts. You would have, and I'll explain to you why later. You could have argued that Z is technically a byproduct because it's insignificant, but here they say they're all joint products, so we treat them as such. Okay, so calculate the profit from products X, Y, and Z if each of the methods for the allocation of joint costs are used. So there's a physical measure, the sale value, and the net realizable value. So the sales, if we do it in a P&L format, we can see this is not based on volume. The sales numbers are given. So these are for each different ones. The cost of sales is sum. So separate cost, that's given. Joint cost is based on value. As you can see, there's a ratio of 8, 6, and 2. If we go back, you can see here as output is 8, 6, and 2. So X gets the majority. X basically gets half of the joint cost, and X and Y together gets half. So as you can see, after 120,000, 60,000 goes to X, and then X and Y obviously less. So then you can calculate, if you've got the separate and joint costs, you can calculate your cost of sales, which gives you, and less your closing inventory, which gives you a gross profit. Now, to calculate the closing inventory, if we go back here, we can see here closing inventory is 800, output is 8,000, 1,200, 6,000, and this is again, and that's half of that. So we can use the same principles. If we see the cost here is 150, this is 10%. The 800 is 10% of 8,000. So that's basically just 800 over 8,000 times 150. So that's 15. Again, this one is half. The closing stock is half of what we produce. As you can see, it is half the value. And then you get a gross profit. Okay, this is just for the closing inventory, 800 over 8,000, 1,200 over 6,000, and 1 over 2. Then according to the sales value. Now the sales value, as you can see here, is 72, 45, and 3. So it works a little bit differently now. So if you look at so here we calculated 60, 45, 15. And if you go to the sales value here, you see X is a little bit higher relative to the others, and the others lose a little bit of ground because of the higher sales value that you've got here. Okay, so relative sales, this is actually net realizable value. So here you have to work out what is your total sales value less your separate processing costs. Remember, net realizable value is everything. The separate processing cost is everything after the split off point. So you have to take your sales value less your separate processing costs, and that becomes your net realizable value. So as you can see, that's 102 76 and 2. And this is the proportions that you're going to use for the joint cost. Again, you can see 68, 50, and 133. So you can see it can actually make quite a bit of a difference to which method that you use. The closing inventory again is calculated using the same principles. This is 10% of the total volume that's produced. So you can see it's 10% of the value. Again, this last one is half. As you can see, that's 1,000 of 2,000. So that works out to that. Okay. So the relevance of joint cost allocation for decision making. So as I mentioned, joint and byproduct costing is a stock valuation technique. It is one of the techniques, along with process costing, along with job order costing, and also standard costing, that we use depending on the nature of our business. For the purpose of further processing decisions, joint cost allocations would be irrelevant to the decision. So if you have to decide after the split off point for any particular product, call it product B, and you say, should we process this further? This is the cost implications. This is the amount of revenue we got further. You should only look at what's going to happen after the processing. Anything, the joint cost is irrelevant for that decision. Such decisions should be based on a comparison of the incremental costs with the incremental revenues arising from further processing. However, there might be a situation where a special order requires the manufacturing of a joint product and subsequent sale thereof, which result in the incidental product of another joint product. Then that becomes another complicated matter, but you always look to the future. If this other product could be sold, then the process should reduce the total joint cost, and thus the selling price quoted for the special order. And should the other product not be sellable, then the selling price quoted must be sufficient to cover the full joint cost of the process. Okay, so how does this work in practice? This company manufactures joint products A and B. At the split off point, these products have a sales value of 7 Rand and 5 Rand respectively. 7 for A, 5 for B. After additional processing, which costs 4 Rand per unit, A can be sold for 15 Rand per unit. After additional processing of 3 Rand per unit, B can be sold for 7 Rand per unit. The company manufactures 10,000 units of B annually. If B cannot be processed further, the annual cost of manufacturing A increases by 12,000 Rand in relation to the annual production volume of 5,000 units. So we must now calculate if B should be processed further and show all calculations and motivate your answer. If B is not manufactured, you're going to get sales for A at 15 Rand. Remember now, A can be sold for 15 Rand because you process it further. B is sold for 5 Rand because you're not processing it any further. There, that's a 5 Rand. That's a sales value. Cost of sales for A is 20,000 Rand. Remember now, it's irrelevant what you've done before. The joint costs are relevant, so you don't show this for B. And then additional cost is 12,000 Rand because I said if we can't manufacture B, we're going to incur extra cost. So this is your total income. It gives you a net of 93. If we can sell B further, we get sales of 75 and 70 because now we can sell B. It's at 7 because we can process it further as compared to 5. Then we have cost of sales of 4 and 3. The 4 and the 3, they're both after the split off point. So this gives you the total income of 95. So you can see this is 2,000 Rand more. It means B should be processed further. Any questions? Okay, the other way to do it is to look at incremental profit. So if we do not, this is not profit after the split off point. Incremental revenue for A. So if we sell A at the split off point is 7, if we sell it after processing, we get 15 Rand. So it's 8 Rand times the 5,000 is 40. The incremental cost is the 4 Rand that it will cost us to process it further. That's 20,000. And of course, a 12,000 Rand further increase in cost, which gives us an incremental profit of 8,000 Rand. If B is manufactured further, we get incremental revenue for A, which is the 40, the same as above. And then we also get the 20,000 Rand for B, which is the extra 2 Rand. And then the incremental cost for A is 20 and for B is 30. You don't have the 12 because you're not manufacturing B or selling B. So it gives you 10,000. So you can see it's still 2,000 Rand difference. So these are the two ways to do it. Questions? Okay, the Adriatic company, this is now another example, incurs joint products cost of 1 million Rand for the production of 2 joint products, X and Y. Both products can be sold at split off point. However, if additional costs of 60,000 Rand are incurred on product Y, then it can be converted into product Z and sold for 10 Rand per unit. The joint costs and the sales revenue split off point are illustrated in the following diagram. So we sell 50,000 of X at 16 Rand per unit, which is 800,000. 50,000 Rand at Y at 8 Rand. You requested to advise management whether or not Y should be converted to Z. Okay, so as I said, it's the relevant cost only, is incremental cost relating to the decision. It goes back to that chapter about relevant costing. That's why it's important to understand it. Costs that will be unaffected by a decision will be classed as irrelevant. Joint allocations are thus irrelevant for decision making. The joint cost of 1 million Rand will be incurred irrespective of whether the decision is taken, and it's not relevant for the decision, which is this cost here. And the information that shall be considered is additional cost and additional revenue from converting product Y to product Z. So the additional revenue that we're getting is the additional 2 Rand times 50,000, and the conversion cost is 60. So the additional profit from the conversion is 40,000 Rand. So we can do it in another way. We can say, if we convert to Z, your total sales will be 1.3 million. If you do not convert, it's 1.2. Your cost goes up by 60, so it's 1.06 and a million. So there's your 40 again. 240 less, 200. Okay, so that goes into in terms of the relevant costing. Then we've got the accounting treatment of byproducts. As I mentioned before, byproducts are products that incidentally arise from a joint process. They are of a minor value. You can sell them, but they do have a value, but they're relatively minor compared to the products that you intend to manufacture. So there are two ways of dealing with this. The one way, which is to use the net realizable value of the byproducts and deduct it from the joint cost. So you don't treat it the same as joint cost, you deduct it from the joint cost. And then the other method is by recognizing the byproduct sales as a revenue and treating the byproducts as inventory. And this depends on the information that's given to you. Okay, so I'll give you an example. So here we are going to have products A and B, and there's going to be a byproduct that's coming from it. We're going to use physical measures method and sales value at split off point method to calculate. So again, we've got 1,000 kilograms of raw material Z which gives you 700 and 300. So it's similar to the previous example. But now, we're not just getting 700 and 300 of B, we're also getting 30 kilograms of C at the end of the production process. So there's this 30 kilograms of C that is as a result of the process. So the joint cost is 4 for Z, 5 for processing, and 1,000. It's the same as the previous one. And A and C are now processed further at 2 Rand and 50 cents per kilogram, respectively. A sells for 12, B sells for 8, and C sells for 1. So if you can see, A is a 12 less a 2, that gives you the net realizable value. And then C sells for 1, and it's got a cost of 50 cents. So it's got a net realizable value of 50 cents. Okay, so let's go there. So there's A 700, so we sell for 12, 308, and 30 we sell for 1. There's a joint cost. It's 10,150 Rand. Okay, so the joint cost is 10,150 Rand that we calculated. The byproduct, because we used net realizable value, is the 1 Rand less the 50 cents further processing times 30 kilograms. So it is 15 Rand. So we have to deduct that 15 Rand from the total of 10,150 to get a new total of 10,135. Okay, so then we can proceed to calculate the rest in the same manner. The physical measures method, there we got 70 and 30% again. So instead of using the 10,150, we used a new total. We deducted the NRV from the byproduct and allocated accordingly, but in the same way. Okay, so I didn't put this on for the sales value, but that's not really the point here. The key here is to know that you need to deduct this 15 Rand. Okay, this is a little bit more of a comprehensive example where we look at a company that manufactures apple products, 3 different ones. Sliced apples that are used in frozen pies, apple sauce, and apple juice. Then, as a result of this whole process, there's also a byproduct, which is the outer skin of the apple that is also used as animal feed. Maroon uses a net realizable value to allocate costs of the joint process to its joint product. So here it says this is a method that you must use. And the net realizable value of the byproduct is used to reduce the joint product cost before the split-off point. Similar to the previous example. Okay, so how is this done? The apples are washed and the outside skin is removed in the cutting department. So this first step is the joint process, because everything that comes from these apples, these 3, the sliced apples, the apple sauce, and the apple juice, as well as the outside skin, which is the byproduct, comes from this step. It's in the cutting department. And then the apples are cut and trimmed for further processing. And 3 joint products and byproducts are recognizable after processing in the cutting department. Okay, then after this is done, then they're sent to the different departments for further processing. Okay. So the good part is that the apples are forwarded to the slicing department, which are then sliced and frozen. Any juice generating during the slicing operation is frozen with the slices. And the smaller damaged parts of the apple trimmed from the fruit in the cutting department are processed into applesauce in the crushing department. And the juice generating during this operation is used in the apple sauce. The core and any other surplus apple pieces generated from the cutting department or pulverize into a liquid into the juicing department. In the juicing department, there's an actual loss of 5,500 kilograms, it's stated. And then the byproduct, which is the outside skin, is chopped into the animal feed and packaged into the feeding department. In total, 270,000 kilograms of apple entered into the cutting department. That's your input during a month of November. And then we're giving a schedule that says, department cutting, the cost incurred is 60,000 Rand. Then you've got slicing, crushing, juicing, feed. If we restate it, we can say the cutting department is where you have your joint cost. So this 60,000 Rand is a joint cost. Okay, that's before considering the effects of the byproduct, but that's a joint cost. Then you've got slicing, you've got crushing, which is the first product, crushing, as for the second product, juicing, the third product, and the feed, which is the byproduct. These are the specific costs after the split off point. Okay, so altogether 60. Then they've got the respective costs after the split off point. Everything together gives you 83. Proportion of the product by weight transferred to the department, 33%, 30%, 27, and 10, which gives you 100. So after 270,000 kilograms, a third went to slicing, 30% went to crushing, 27 to juicing, 10 to feed. Okay, that's one. Then the selling price per kilogram of final products. So here we go. This is now important in terms of the net realizable value, because remember we were asked to calculate it on net realizable value. Okay, for the month of this, it's very old, probably to update it. Calculate the following: the output for apple slices, apple sauce, apple juice, and animal feed in kilograms. See, we work on steps here. Estimated net realizable point at the split point for each of the three joint products. Amount of cost of the cutting department assigned to each of the three joint products, and the amount assigned to the byproduct in accordance with the corporate policy, and the gross margin in Rand for each of the joint products. Okay. So we know we're given 270,000 kilograms. So we need to calculate it using these ratios here. 33, 30, 27, and 10. So you can see 27,000 is 10%. And then that's a third, and so on. So that is the amount of product that was sent to the different departments. 270,000 in total. In addition, it is said that 5,400 kilograms of juice was lost in this department. They didn't say for any of the others. So for these guys here, we need to deduct 5,400 kilograms. So it gives you net kilograms of here 89, 81, 67, 27. So we're left with 264, 666, 264, 600. Okay. That's that. Then the estimated net realizable value. Okay, so we know what the net kilograms are because we calculated previously. There they are. We know what the price is, so we can calculate what the total revenue is. The separable cost, we can calculate. Let's go back from this table. You see, there it is: 11,280, 8,550, and 3,000. So we have an estimated NRV of 60,000. So it's a 71 less the 11, 44 less the 8, and so on. So that gives us a total of 120. That's net realizable value. And now, because we've calculated the net realizable value, we're now able to say using these ratios here, that's 60,000 out of 120, the 24 out of 120, to allocate the joint cost to the different products. Okay, but before we do that, we need to calculate the byproducts, because we need to deduct the net realizable value of the byproducts from the joint cost. So the 60,000 Rand joint cost, we need to deduct from that, we need to deduct the byproducts. So the byproduct revenue is 10 cents, because it's 270,000 times 10% less the 700 separable cost. So it gives us 2,000 Rand. So we need to deduct 2,000 Rand from the 60 to get to a new joint cost, which is 58. Okay, there's a 58. And now to allocate it to the three different joint products, half of it, the 60 over 120, we need to assign to slices. That's 29 out of 58. It's half. And the same with the sources, that ratio, and the rate ratio. Okay, so we've calculated the revenue, we've calculated separable cost, we're able to allocate the joint cost, and it gives us a gross margin of this per product. Questions? Okay, that's the end of this. I've sent you guys tutorial 8. You can have a look at it and attempt the questions, and then I will ask Duma to schedule a tutorial session. Any other questions? Can we close this meeting? Are there any questions? Okay, if there are no further questions, I'm going to stop. I'm going to stop recording, and then we will schedule another lecture for the previous units as well, because I know in class physically I did the first 3 units, so I would like to do units 4 to 7 as well in the coming weeks.